Hey, good afternoon and evening, everyone. Brian Hoops, Midwest Market Solutions, our Market Insider TV commentary following today's WASD report. It is September the 12th, Thursday afternoon. As I am recording this, markets closed higher despite a really unimpressive report from the government without outside news, mainly in the overnight markets regarding China and President Trump and the appearance that we are getting closer to reaching a trade agreement. I think we would have seen probably some lower prices today, but there was a lot of outside markets influences that are giving us strength here to close 28 cents higher in soybeans despite a nominally mixed bullish bearish report. Wheat 5 to 6 cents better, and the corn 7.5 cents better. Certainly, we look at these, we'll dive into these numbers. They can change, but they're not going to change that much, I don't think, as we go into the final numbers at the end of the year. Let's take a look at what the government had to say in today's report. And if you have questions, I'll give you a list of our offices. You can reach out to any of them. Follow us on Twitter at Midwest Markets. Go to our website. You can sign up for our daily Market Insider TV segments that come out twice a day, our Market Minute that comes out every morning, our daily newsletter, our hedge program, all kinds of features from all of our offices. We have 12 licensed brokers, 10 offices, all throughout the Midwest, and we're part of the oldest clearing firm of the CME, R.J. O'Brien. We've been around for 17 years now, so been in business a long time, grown to many offices, serve a lot of clients in this time. Again, we have full discount brokerage services, market quotes, and trading platforms, as well as our newsletter series, audio and video commentaries, our trading systems, Twitter feed, and our text messaging service. So check all that out. You can find out more information at our website, MidwestMarketSolutions.com. This is a look at the numbers here, kind of a quick snapshot. This column here is what the USDA said. This was our estimates, and then what we did last month, and then let's compare it to last year. So our corn production, 13.8 billion bushels, let's call it. That's down about 100 million from last month. A step in the right direction, but certainly well above what the USDA, what the trade had expected going into this report. Now, we said to be weary of this estimate. 6 out of the last 7 years, make that 7 out of the last 8 years now. So the USDA has come in above the average trade guess. Trade has been too optimistic in the month of September. Last year, we were at 14.4 billion bushels, and this crop is a step in the right direction. We're down a bushel from last month, 1.3 bushels per acre, but we're up above the average trade guess by 1.5. We are down over 8 bushels per acre from last year's production figure. So when we talk about the crop not being as good as last year, absolutely, the USDA's factored that in with today's numbers, but could it get worse? Well, last year, from the September to the final in January, we dropped another almost 6 bushels per acre. We could see that type of a drop once again. Now, the biggest drop was in 1993. A lot of people comparing this year to 1993. That's when we fell 12.5 bushels per acre from the September to the final. So that is certainly part of the equation in here. Something that we're focused on. This is, kind of a step in the right direction, a reduction of yield, but it's not anywhere close to what the trade was expecting. But there's still room to maneuver. We've thought all along it's going to take until October before we can really see what this crop is yielding and how good, how bad this crop is going to be. We got to get some harvest data, I think, before we are able to justify this. I was asked on an interview today, did many interviews today. One of them asked about, is it possible the USDA is accurate? Well, we've had farmer survey after farmer survey after farmer survey that says this crop actually is in this range, 166, 167, 168. Some private estimates last week. The USDA numbers based off of farmer surveys. This is what the farmers expect the crop's going to be in that 167, 168 range. We're going to actually have to get out into the fields before we can prove or disprove that. Soybeans, kind of the same theme, where we had a lower crop compared to last month, lower yield compared to last month, but again, above the average trade guess. This is the column for average trade guess. And compared to year-ago levels, we're down compared to last year. We know this crop is not going to be as good as last year. This is the 8th of the last 10 years where the USDA has come in above the average trade guess. Last year, soybean yields fell another 1.2 bushels per acre by the January final report. And we'll see if we see this, but I think it's going to take, again, harvest data before we're able to determine the size of this actual crop. All right, let's look at the demand trends here, and this is ending stocks, and we'll look at a little bit deeper demand commodity by commodity. Here's a troubling sign: corn ending stocks. Look at this. A year ago, we were at 2.140 billion bushels. This is old crop, and this will probably be the last time we talk about old crop as the marketing year has ended. But we're carrying over 2.4 billion bushels worth of ending stocks into this marketing year, and that adds to our balance sheet. That's up from last month, and compared to a year ago at this time, we've added a record decline of 875 million bushels back into our balance sheets because of poor demand. Soybeans, similar but not quite to the extent. Poor demand has accounted for about 359 million bushels added back onto this balance sheet. Last year we were at 438. The crop ending stocks is 1,005 billion. So, you know, it's down from last month. Corn's up from last month. It's up from last year in both these cases. Now let's look at this new crop marketing year. This is what we are going to look at focusing going forward. We'll be talking about this over the next several months. Corn, 2.19 billion bushels ending stocks. That's more than we had a year ago when we had a bigger crop, all because our demand trends have been slow, well above the average trade guess. It's actually up from last month because we carried more crop in. Soybean stocks, 640, down from the average trade guess. So that's a supportive number. There is some supportive numbers in this report, but nothing bullish. That's down from last month. And compared to a year ago levels, it's certainly much better, much improved, as you know, our production numbers are down and our demand is picking up just a little bit. Wheat is kind of the forgotten one here, as it's right in line with the average trade guess. It's unchanged from last month. It's down from last year, but USDA made no changes to production. They're going to wait till the small grains report at the end of the month, and there's really no reason to change demand trends whatsoever for wheat at this time. We're going to take a little closer look at each commodity. As always, if you have questions after we conclude this webinar, just reach out to me. I'll be glad to answer them. Corn revisions here from the government from 1 month to the next. This is old crop year. This is the new crop year. Yields are down 1.3. We talked about that, but the beginning stocks carry in much larger. Our production is down. Imports are down. All this demand trends, look at this, is all down. All this demand, our demand here at 14.105 billion bushels. Compare that to August of 2018, we're at 14.2. We've lost a little bit of our demand, and a lot of it is right here in this export forecast. I think this is probably too high still, but we'll talk about what I think in a little bit. Bottom line, even though we're losing production, our ending stocks are not dropping in here. This is not a bullish scenario by any means for the corn market. 2.190 billion bushels of ending stocks. It's negative, and it's not as bad as what we were like last year at this time. We were talking 2.4, but it's certainly a negative number. State by state area as far as yield goes, I want to look at Illinois. Crop ratings fell pretty hard here this last week. They're still at 180 bushel yield, down 1 from last month. You can see a lot of these states are in the red, but very little changes. Some of these, Washington, this big drop here is Louisiana. These are not major corn producing states. You look at the major I states, Michigan, Minnesota, you know, they're down slightly. You go up to Iowa, it's unchanged. Illinois, down 1. Minor changes in here results in a small reduction. No change in harvested acres, planted acres, but production is down about 100,000 bushels. So not a major change, not a major shift. We're going to have to get into, as I said, October before we get into actual numbers. Here's USDA numbers. This is historicals. This is USDA numbers today. This is my numbers. I still think the crop is down a little bit, but I do think it's going to take a lot of time before we're able to determine that. So I think if you use a closer to 166 yield, 165.8, same amount of harvested acres, you drop production by 1.8 million bushels, or 188 million bushels. My math is bad. So that doesn't drop it a lot. Even if you drop yield down into this area, you don't drop it a lot. The problem is this export profile. I think the USDA is still likely overstating exports. We are off this year's export forecast. This is the worst year in the last 14 years for our exports. And you go back to 2014, to about 2012, 13. Our exports were a disaster in this year time frame because prices got so high. But our U.S. dollar is not going to cheapen anytime soon. But look at these export numbers in 13, 14, 14, 15, 15, 16. You're below 2 billion bushels. USDA is still above it. I think they're still too optimistic. I do think this comes down over time, and that's going to add to our ending stocks. So I think your production comes down. I think your exports come down, and this is probably closer to where we're actually at. We're closer to 2 billion bushels than 2.19 that the USDA said today. This is not a bullish market, in my opinion, based off of those ending stocks until we find a way to reduce our carryout levels. Let's look at soybeans. Some minor revisions in soybeans today. Nothing as far as harvested acres or planted acres. Yields did come down almost half a bushel. Beginning stocks also dropped. That's because we had strong exports to finish the marketing year. Let's talk about that for a second. It wasn't that we had strong exports. For most of the summer, we were going into it thinking we may not meet the USDA forecast. The reason was because China purchased a large amount of soybeans and never shipped them. Today, it came out that they purchased a large amount of soybeans. We'll see if they ship them and how quickly they do. It goes on the books as a sale. If you look at the shipment numbers, we could tell we were not getting close to the USDA forecast until the last 2 weeks of the marketing year, and China finally shipped those soybeans out. And we look at our exports, 1.775. This is a good number. It was a number that we hit, and I think that's justified. USDA left it unchanged for the new crop marketing year. For the old crop, they actually raised exports by 45 million because of those Chinese shipments. That's certainly justified. Crush was a little bit stronger into the end of the year. That's justified by raising this by 65 million, and that came right off the end of the balance sheet, off of our beginning stocks. Then you go through here when you take total supply down by 113 million, and you make very little changes as far as exports. This 1.775, I think it's too low. I think there's a little bit more export business out there. They dropped ending stocks at 640 million bushels, down to 115. This is not a bullish number either. And let's look at our next slide, and I'll show you why. Well, actually, our next slide is soybean yields. You go state by state. We'll go through this real quickly. Illinois down 2 bushel an acre. Iowa down 1. Starting to see some yields come down, but as we get into the harvest, we'll expand that and focus on it more. This is one I wanted to focus on. Let's look at this ending stocks number, 640 million bushels from the government that they said. That's well below where we were a year ago, but in history, it's the second largest in history by far and away. We came in at 438 million, thought this was a terrible number. This is 1.5 times this number. It's a considerable better than this. I actually think it's going to tighten up even further as we go through the winter months. Reason, I think our exports are going to be better. I do think we're going to reach an agreement with China. They've made a purchase today, and that's not factored into this. Let's see if they ship it, but I think your exports are going to improve off of what we saw this year here, 1.745. You go back and look at history. The last few years, 14, 15, 15, 16, 16, 17, 17, 18, we are hovering closer to 1.9 to 2 billion bushels as our average. We're still below our average pace. If we get an agreement with China, I would expect that they will be good buyers of soybean and U.S. soy products. This may be low by the end of the year. So that's why I'm not as bearish as the USDA. I think the yields do come down a little bit more. It's very early in the growing season. Some of these beans may not reach full maturity. I think if there's a market to be bullish or optimistic on, I think it's soybeans. I don't think it's corn. I look for soybeans to advance pretty sharply through the winter months if these yields come in as I expect and our exports do improve a little bit. So we could shave 140 million bushels off of this soybean carryout. All right, we're going to conclude with wheat, and there isn't that much to talk about for wheat. As you can see by this balance sheet, no changes whatsoever export-wise